Cryptocurrency regulation worldwide is experiencing significant shifts, reshaping the landscape for investors and industry players alike. Governments and financial authorities are crafting new laws and proposals to bring clearer oversight, manage risks, and foster innovation within the digital asset space. In the United States, regulatory momentum continues as the Federal Reserve and congressional bodies consider more open approaches. Recently, the Fed's Christopher Waller proposed allowing stablecoin issuers direct access to Fed payment rails without full master account privileges, signaling a softer stance on crypto firms. Meanwhile, the Senate's debate over the Clarity Act highlights deep partisan tensions. Democrats criticize industry executives for perceived partisan alignments, complicating the bill's path. The legislation aims to clarify whether digital assets are securities or commodities, potentially streamlining regulation. Additionally, President Trump's nomination of pro-crypto advocate Michael Selig to chair the Commodity Futures Trading Commission suggests a future regulatory environment more receptive to innovation, provided bipartisan support is achieved. Across the Atlantic, the UK's tax authority, HMRC, has announced crackdowns on unreported earnings from crypto holdings, signaling increased enforcement after years of leniency. This tightened regulation aims to close loopholes exploited by many crypto investors who until now operated under the misconception of being outside the tax net. In Asia Pacific, regulators in Hong Kong, India, and Australia are tightening their grip. Hong Kong's stock exchange recently rejected listings from digital asset treasury (DAT) firms, a move reflecting regional efforts to curb speculative risks and ensure market stability amid rising scrutiny of crypto treasury strategies. Meanwhile, some countries are embracing digital currencies more actively. Kyrgyzstan launched its national stablecoin and CBDC on BNB chain, marking a pivotal step in Central Asia's digital economy. This aligns with efforts by nations to adopt blockchain for official payments, reinforcing the strategic role of stablecoins and CBDCs. The legal landscape also includes initiatives to regulate derivatives and institutional participation. The U.S.'s new pro-crypto CFTC chair, if confirmed, could support clearer rules for futures and derivatives, boosting market stability. Similarly, the European Union is advancing its markets in crypto assets MiCA framework, aiming to create a harmonized regulatory environment for crypto assets across member states. For investors, these developments suggest a more defined yet cautiously expanding regulatory framework globally. While some jurisdictions tighten controls to prevent fraud and protect consumers, others are creating pathways for responsible innovation, including stablecoins, tokenized assets, and institutional participation. Overall, the trend points toward a future where regulation